Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a quick look at PayPal holdings here. Stock is up about 3.5% after their Q1 earnings call. Q1 earnings call itself and the results were pretty solid. Guidance was actually an improvement, but I think the investor community is still kind of worried about their transaction margin percentage continuing to decline, even though the transaction margin dollars are going up. We'll take a look at all of that in a second. This is a stock that I do own. And if you look at the 3.5% bump today, it's kind of maybe muted because the stock had a bit of a run up in the past 5 days, up about 8.5% in the past 5 days. 6 months out, this has been a really good performer for me, up about 34%. I was a buyer in the mid 50s, low 60s. Will I be a buyer again? We'll take a look at the valuation. If you're a long-term shareholder, down about 7% in the past year, down about 37% in the past 5 years, down quite a bit since the pandemic boom, where a lot of these fintech companies really soared, but now they're coming back down to earth. Might be a good valuation. Alex Christ, their new CEO, really talked about this being a transition year for them, focusing on execution, kind of changing the way they do things, doing cost savings initiatives, etc., making sure this is a leaner, more efficient business, and making sure that more of their tech stack is up to snuff. He's not afraid to say what's wrong with the company. He's pretty candid about what's going wrong, and he's pretty candid about where they're going. So I like that about him. I really like the CEO, and he makes me feel pretty good about being a shareholder. But let's take a look at the actual results here. Q1 revenue is up about 9%, GAAP EPS up about 18%, non-GAAP EPS up about 27%. And remember, when you look at non-GAAP EPS, they are using a new non-GAAP methodology, including stock-based compensation and related employer payroll taxes, which they did not include in the past. So if you're comparing old non-GAAP EPS to new non-GAAP EPS, keep that in mind that this one includes stock-based compensation. The former does not. So overall, pretty solid. The one thing I was really happy to see is that transaction margin dollars are up about 4%. Their guidance for the year was to be flat. And now during the call, they basically said that we are expecting transaction margin dollars to be positive in 2024, which is really good to see because that is good driver of their bottom line results and their cash flow and what they're doing as a business. I really want to see this return to growth and also their transaction margin percentage to return to growth, which has been pressured by the way their business has been growing. And I'll talk about that in a second. Total payment volume up about 14%, and cash flow, which is why I really like this business, is $1.8 billion for the quarter. On a 12-month basis, $5 billion in free cash flow. And they basically use all of that to buy back shares at the moment, $5.1 billion returned to shareholders via repurchases, and that's about 5.5% of outstanding shares deleted, which is really nice to see as a shareholder. And the balance sheet, $17.7 billion in cash and cash equivalents and $11 billion in debt. So a really strong balance sheet as we look at it today. And then guidance, as we look at 2024 guidance. And again, GAAP earnings up about 5 cents versus their prior guidance, 365 compared to 384 in the prior year. That may look like a decrease, but remember 384 includes 24 cents from the gain of the sale of Happy Returns and then some additional gains on some PayPal strategic investments. If you just remove Happy Returns, it's a slight bump. And then as you look at non-GAAP earnings, because they are including about $500 million in restructuring charges, some layoffs, etc., changes to the business. That is now increasing by a mid to high single-digit percentage versus flat in the last guidance. And then again, it's compared to 383 based on that new non-GAAP methodology. So if you look at the Q4 earnings, that might be $5.10, but it's actually 383 on a comparable basis, including those stock-based compensations. A couple of things I want to point out. One, branded checkout growing at a faster clip again sequentially, growing 6 down to 5%, now back up to 7%. That's good to see. They talked about Fastlane and how that's improving branded checkout, how that's really making that grow at a faster clip. Where they've rolled it out, it's really in the testing phases. They're going to roll it out more throughout the year, and they expect that to be in every branded checkout purchase sometime in the future, and they're really seeing good results on that front. The negative side of things from this business and from the way the investors look at this is that unbranded checkout continues to grow at a much faster clip than branded checkout, and unbranded is a much lower margin product. This is Braintree. This is them basically offering payment processing on an unbranded basis to other customers. Like, you go to Airbnb and you check out through there. It doesn't look like it's PayPal, but it might be Braintree, their service, powering that checkout experience for you. In the future, I think they need to improve the margins on this product because it's going to grow at a faster clip than branded for a while, I would think. And because of that, that's going to put pressure on margins. If they can do what they talked about during the Q4 earnings call, basically improve margins, not focus so much on growth in unbranded checkout, but really focus on improving pricing, improving margins, that will all flow down to the bottom line because that is going to become a bigger and bigger part of their business. And as it does, that puts pressure on transaction margin dollars and transaction margin percentages. Venmo continuing to grow at a decent clip. That is a good product that they have. And then as you look at P2P excluding Venmo, that's maybe stuff like Zoom. They talked about Zoom and whether that fits into their portfolio. They decided that it did, and they really worked on improving that service model, improving what it offers to consumers, and that's starting to grow at a decent clip again. So that's nice to see that a lot of these things that you want to grow, like P2P excluding Venmo, like branded checkout and Venmo, which have a bit of a higher margin business line than something like unbranded card processing, which is also still growing at a decent clip. Those are still growing at a solid clip and improving growth. So what I would want to see as a shareholder in the future is improving growth on stuff like branded checkout and improving margins on stuff like PSP, the unbranded card processing, because that's going to really matter in the long run. I think that's what they're working on. Transaction margin, again, really good to see that transaction margin dollars are growing on a year-over-year basis. We'll kind of float down here to see the supplemental stuff. If you look at transaction revenue, if you look at transaction margins, you can kind of see the growth was 1%, 1%, negative 3%, flat, and now you're back to actually seeing growth, and now they're guiding to actual positive growth in 2024. Really good to see. What's not good to see is transaction margin percentages continuing to slip down to 45% in Q1 2024. The question for me as a shareholder from a long-term perspective is, can they get this up again? Because if they can get this growing again into the 46, 47, 48% range, that's going to be hard to do. That's going to require two things. It's going to require growth in branded, in PayPal branded, and improving margins on the unbranded side, because that unbranded side is growing so much faster. But if they can do that, this could be a really fantastic investment. And or even if they can keep it steady at 45% and continue growing payment volume at mid to high teens, that is going to be very impressive, because that's what you're seeing now. You're seeing payment volume actually increase, and a lot of that is coming from unbranded stuff, which is lower margin, which is putting pressure on transaction margins. However, as long as transaction margin dollars are seeing positive growth, I'm still happy. If these continue shrinking and this starts shrinking, that could be bad news for investors. And I think that's what the investment community is worried about here, that if transaction margins don't improve, that could eventually put pressure on transaction margin dollars. And that is a problem from a bottom line perspective when it comes to how PayPal is doing. So as I look at PayPal's valuation, and again, video is purely for informational, educational, entertainment purposes only. It is not investment advice. Please do your own due diligence. I'm looking at PayPal here, looking at their growth based on the estimates here, but I'm also putting in my numbers here. Slightly lower growth expectations for me than what the estimates are expecting here. Free cash flow margin also improving at a slightly lower clip, so maybe I'm being a bit conservative. I still have a worry that in the short term, those transaction margins are going to be pressured. Unbranded is going to grow faster than branded, obviously, but I'm not sure that they're going to be able to improve margins that much on the unbranded side and grow the branded product that much faster, even when you include stuff like Fastlane, even when you include stuff like PPCP or whatever their new small business product is. A lot of that stuff does sound interesting. I just have to wait to see that play out before I put that into my basis as a revenue boost or as a margin boost. I'm still assuming margin expansion in the next couple of years, and then I'm assuming slowing growth with the majority of their money going towards buybacks. You can play around with the spreadsheet if you want. Just hit file, make a copy. There'll be a link in the description down below. So as you look at these growth rates, if you look at these margins, if you disagree, agree, whatever, you can change around and play around with the valuation as you see fit. As I look at the valuation, it's basically trading at a 7% free cash flow yield based on the next 12 months of free cash flow. Pretty interesting, considering this is a company that could still grow in the mid to high single digits for a variety of years, that could still see the expansion of their margins, that could see, buying back 10 to 15% of their business in the next couple of years. Just in the last 12 months, they bought back 5.5% of their business in terms of buybacks. That's pretty interesting. So as I look at the scenarios here, I'm kind of valuing this closer to 6%, 80% of the weighing and the 6% free cash flow yield, 20% of the weighing and the 7% free cash flow yield. So some upside from today. If you want to be conservative, maybe you go into the 7% cash flow yield. If you want to be aggressive, maybe you go closer to 5 to 6%. For me, kind of in that 6 to 7% range makes sense. And with that in mind, I get a fair value of about 74 bucks, which is about 7% higher than it's trading at today. So seems to me like it's trading at a reasonable valuation. And the reason I like this stock is because the upside seems relatively decent. If they can do things well, if they can improve margins more than I'm showing here, if they can grow faster than I'm showing here, if some of these initiatives that they're doing can pay off really well and they continue to buy back shares, the free cash flow yield could expand and you could be looking at a 15+% return. And on the opposite end, if they don't do that well, if they continue kind of just trudging along and the free cash flow yield kind of shrinks to 7% to 8%, you're still looking at a increase, right? You're still looking at a 6 to 7% return. So there's decent upside without a huge amount of downside. So at this valuation metric, I'm kind of seeing an 11.5% return on an annual basis for the next 5 years. Does that mean I'm buying here? Probably not. I already have a pretty sizable investment in PayPal. I'm still kind of uncertain about transaction margins. The fact that transaction margin percentage dropped another 80 basis points in this quarter did not make me happy, even though all of the other stuff looked good. I really, really focus on that transaction margin percentage as an investor, and that didn't look good. So for me, if I wanted to increase my position, I'd probably be looking at closer to a 15% target return, which again would be at the price point that I was buying it at a couple of months ago. So if this thing drops another 15% because of whatever reason, market turbulence, etc., and gets into that high $50 range, would I increase my position? For sure. Today, I'm just more in the hold steady position. I'm happy with where the stock is. I'm happy with where it's priced. It doesn't seem like a screaming deal to me, but it seems like a pretty decent deal. And if Alex Christ and the team can execute, if Fastlane and all of those other things that they're putting into place can really help grow branded, if they can improve margins on the unbranded side, continue to grow Venmo, etc., this could be a really good long-term compounder from today's price point, and I'm happy to hold it from here. I'm just not super excited about buying more until I see this transaction margin trend reverse, because dropping another 80 basis points, dropping another 40 basis points from the prior quarter, not ideal, and it just shows to me that the stuff that they're doing is going to take more time to play out. And until I see that it's playing out, until these transaction margin percentages start to go up a little bit, I won't be a buyer, but I'm also not a seller. So let me know what you think. Do you think what I'm saying here makes sense? Is my valuation too conservative? If you play around with this sheet, let me know what you get as a fair value. Are you a buyer? Are you a seller? Are you a holder? For me, I'm a holder. As always, guys, thanks for watching the video. Hope you enjoyed it. Let me know what you think. Leave a comment down below. Like, subscribe, all of that good stuff. Hope you have a good day. Bye.